And no one knows more about these regional banks than Anton Schutz. He is president and CIO of Mendon Capital Advisors. Fair to say, Anton, banks are your fishing and banks are your life, right? That your family.
Yes, those are the three things.
All right.
Depends on the order sometimes.
Yeah, we'll invert the order. It's a business show, so we'll start with the mid one. Let's start with Banc of California, BANC. Big change here at the top. CEO making a lot of changes. One reason you like this company.
Well, I mean, it trades below book value when, you buy banks below book if you can. And it's a large Southern California bank, which means it's also very attractive to others potentially down the road. They've done a lot of things. They've shrunk the balance sheet. They've gotten credit under control. I think they're going to start growing again into the future. They've also been very opportunistic with their capital, and they've bought back a lot of stock below book value, which has added further to book value. So I really like the path here. I like what they're doing. Private equity is behind this bank. So if he performs well, terrific. If he doesn't perform well, I see a for sale sign on this company. So either way, I think the investors win.
Yeah, banks in California have an uncanny ability to get bought out. It must have something to do with, 1 in 6 Americans living in the state. Home Street, I don't know a lot about this company because it's pretty new to the public markets.
Yeah, so Home Street got taken over by a bank called Mechanics. It's also in California. It's about a $3 billion market cap. No one's heard of it. The research is not doing any work on it yet. We'll see some reports coming out. But because of its size and because Mechanics bought Home Street, we're going to see that added to the Russell 2000. So there's going to be tremendous demand, right, even beyond the fundamentals. I believe it trades at about 7 times next year's earnings. And you've got a lot of private equity behind this bank, which also means they're capitalists. And I believe there's a potential not only to get the numbers into very good shape, but potential to sell this bank within the next 18 months. So, love the upside here. It's really interesting. Underfollowed. It's going to be more followed.
The next one it's a little wonky in our world, but First Horizon, a lot of people talk about it. A lot of people have strong opinions about this company either way. They were going to merge with TD, Toronto Dominion, the Canadian bank. That got called off. You've owned it for a while. What is it about First Horizon that you still find attractive?
Well, first of all, geography. Geography, I've said it many times on your show, Brian, it matters, right? And they're in the Southeast, they're in Texas, they're in North Carolina. I mean, they have really great markets. So first of all, great market. Second of all, conservative culture. So not taking a lot of risks. They've got good mid-single digit loan growth going into next year. They also buy their own stock back. And again, this company is very attractive to bigger banks. Does it need to sell? No. But again, you can win either way. You can win by someone paying a lot of money for this bank, or you can win by them just continuing to do a great job fundamentally and buying their own stock back. So love the geography, love management, very close with these guys. And, I had a chance to buy it back when that deal blew up. So, and that deal did not blow up because of them. It blew up because of TD getting into trouble. And that was unfortunate.
Yeah, but it could be a fortunate opportunity for a lot of people. First Horizon, Home Street, and Bank with a C of California. Anton Schutz, enjoy family, fishing, and the banks. We appreciate your time as always.
Always a pleasure.
All right, thank you.